been a while since I've done a Fibonacci upside video for silver, so I'm going to do another update. We're looking at a quarterly chart dated December the 31st, 2005. And I only have one Fibonacci line within here because the significant high is not this 17-ish area. No, it was 50 from about 4 periods before this, or the start of 1980, where it was in at that of about $50.50. Therefore, for the bear market to complete, it needs to hold and stay above 965, and for it to be a failed move, and it would have to stay and hold above it for 1816. It's obviously gotten above both those levels, and it was a failed selling move. But this is about the Fibonacci upside retracement, and what I do for this is I look at the area from a bottom point where it establishes a range, and then I take the key bottom, key top, and then from that point on it's fairly simple. I've chosen 4 as support, 8 as resistance. 4 is approximately somewhere, let me just draw it again, 4 is approximately here, and 8 really around here. So this is the range. An area that was resistance in here. It was a band of support trading above and below that pierced above here, perfect hit in here, and of course you got the nice perfect hit here in this area that it resisted a few times, just breaking out of as we look at this chart. So to do Fibonacci upside, I take the difference of the range, and the difference from 8 and 4 is that of 4. I multiply that by the fib percentage, which will start off at 1.618, and I add that to the previous low of 4. So that's how we'll be doing this. So we'll take 1.618 and multiply the difference of 4. That's 647. You add 4 to that. The first level is 1047. There'll be other levels on top of it. So if I multiply 1.618 by itself, I'm going to get 2.618. So I can multiply that by 4, which comes to 1047. And I can add 4 again, 1447. So those would be the next 2 levels that I'd be looking at on the break above this, because it does look like it's breaking above 8. Nice little pattern. It might pull back down into here, but even then, if it pulls back and goes higher, I'm looking for it to go to 1047. So let's take a look at the next chart. And the next chart is going to take us back to 2006. May the 25th. This will be the daily time frame since this point. Here we are. 1047 is this first line in here. And the top line is 1447. Ignore these percentages for Fibonacci retracement. They were manually put in so that I could match what the Fibonacci upside numbers were. When you hit this level that you're supposed to find resistance, if you don't do so, then you'd be expecting, okay, is it going to be a pierce above that ends up selling off? Is it going to be a situation where it's going to be a level of support before it goes higher, or are we just going to have a fast move to the next level? Well, in this case, they had a fast move. That would be to the next level. So at this point here, you might sell a little bit because that was your first sell target. And as it's going higher, like, oh man, you're not going to sell more, nor are you buying more. In fact, as you start to see this trading in the 11-12 range, you know exactly what you're going to do. If the next move is a play up here, you'll sell some more. If the next move is a play down here, you'll buy some more. So the next play was obviously that of selling at this point. Now there's many times where if you reach this level and it pulls back, that it's okay to buy without hitting this line, which is sometimes going to be the case. Not always. In this case, I would even say no, because it was a fast move to the upside. You come back and now you're finding resistance at here again, pull back. At this stage here, it could have very easily continued to go higher. It obviously didn't, but it did show how huge that 14.5 level would play out. Okay, so let's continue this even further. And the next one that we're going to take a look at will be in 2007. So here we are. And this is where we left off at. So it did manage to come back down to that 1047 level, which was an area in which you buy. Sure enough, it manages to go higher. This was a very deep pullback. I would have been very concerned that it went down a little too much or more than I wanted to, but you're back to that key 10.5 area. And sure enough, it comes, makes this high, and reaches this level again. Again, this is one of those spots where, because we've had a lot of tests within this area, that the pullbacks, if there are any, shouldn't be so deep. And well, that was actually more deep than I would have expected. This here, yeah, that one wasn't much of a surprise. Because you go from point A to point B, I'm expecting a higher low. I wasn't expecting it to be, or I wouldn't have expected it to be, to go down that much, but again, it did. So here we are again, back up to this level that has been tested on multiple occasions. Again, I'm thinking it's such a huge test. No way you sell at this level. If you see that this thing has a nice breakout, then I'm saying the next level is going to come into play. And it wouldn't surprise me either if there was a pullback, but ideally a pullback here. And then a move there would be the most bullish pattern that I would be seeing. But it's good to know what the next level happens to be. So let's figure that out. So we'll start with that 1.618, multiply itself again. That gave us the 14 level. So we'll multiply it again, which, just try it again. That might be a little too deep. 1.618 multiply 4.236. That's the next one. So we multiply that by 4 again. 1694. We'll add 4. $20.94. Let's move on up to 2008. And there's this 2094 level that was sure enough that of resistance. When it pulled up above this level, it came back, found some support very nicely at the 14.5 mark. And then when it was finally ready to get going, it kept going and going and going and going, basically. And even when you're in here, there would be no reason to think that, well, it's going to go lower, in the sense that, okay, you got this level here, which is key. But remember back at the original chart, the high 18 level was a significant fib level. Let me just go back and see what that was offhand. 1816, okay. So now let's go back to the same chart, and we'll draw a line at 1816. So somewhere around here. So in this section here, somewhere around here, you would know that it should at least go to this level. And then, of course, the next one would be the 2094 mark. And sure enough, it was 2094 that found resistance here, pulled back a little bit, had another test of this level, and then, of course, moves on to a sell-off side of this range. So now, again, if it goes down to this level here, then you buy. If you bought in here because you sold at 20 and you just want to make sure you get in cheaper, that was fine. Again, maybe if you did that, you will sell that little bit if it goes here. And again, if it goes down towards this 14 level, which should be support, that would be a decent time again. And again, if it's not support and it goes down lower, it could just be a fast move, which is exactly what occurred. So let's move on to the next chart, which will take us to the 2010. We'll do a long term. This is an 11-day chart. So this is where we left off. And it didn't find much support there. I love the idea of 14 even being support back at that day. And I was surprised that it did manage to have this V-shaped formation. However, for those people that did buy in at this level, held this here, then they held this, and then now all of a sudden they're back to the profits again, and they have been ever since. So you don't always have to pick the exact bottoms when you buy, nor the exact tops when you sell. There's also that matter of that 1047 mark as well, because I can only put 2 fib lines on this chart, or software that I use, which is really more of a spreadsheet. But at 1047, it did stabilize within this area, and I suppose if you bought here, then there's nothing wrong with buying again in here, because if you know the 411, then you would probably realize that the play is not over yet. So it's interesting how you got nice resistance here. You break above this part here, you stabilize within here, and even this support level was close to the 14.5 mark. Now, as of the end of this chart, which is September the 21st, 2010, we are having a test number 2 of this mark. And you also have been testing just about 8% below this mark for about even 6% for months and months and months. So there's one reason to say it doesn't have to really pull back much. Again, what would be ideal from here would be a pullback down to about 19 and then take out that 21 level. That would be the most ideal thing. Now that didn't happen, it kept going, which is something you shouldn't be surprised of when you see this type of pattern. And of course, if it does, we go to the next level. So we'll see what that next level is. So that was the 161 was a 10, 261 is 14, 423 is the 21, the 685 is the next one, and we'll multiply that by 4, which is 2741, and that would make it 3141 or 3142. So therefore, we'll go now to the next chart, which will take us to March of 2007. So there's that breakout above there. Like there was really no resistance, or very little at that, as it only pulled back maybe 30 cents. And pretty much straight up to this line, just about a percentage off from this mark here, if even a percent, maybe a 0.5%. And before it had its only pullback that was somewhat deep, either through time or price. And now we notice again that, well, it's broken above this level. Again, what would have been ideal would have been a pullback like that. But no, it didn't do that. However, what's ideal if it breaks out is to come back to this level. Now notice this line is just a little above it. It sucks. When you're waiting to buy at 31.42 and you're waiting on this red candle in here, you've already seen it go up to 34 and you're waiting for 31.42. Next thing you know, all it goes is to like 31.51 or something, and you didn't get in. Well, sometimes if you miss, then just buying at the end of this period, something like that, is what you got to need to do. Therefore, with that being said, that means the next level is in play. So this is the 14, this is the 20, this is the 31, this would be the next one. Multiply this by 4, that's a difference of 44.36, which is 48.36. So we're going to finish this chart off within the weekly chart that we have right now. You break 31 all the way up to 48.36, which is where resistance was found. Support, decently sized, pierced above this line, and for the last year it has been trading above and below this 31.5 level. So therefore, of course, if you sold again in here, you sold here, That means you most certainly should have bought. If you didn't buy here, then you should have bought here or anywhere during this level. Maybe if you do buy in this part here, I would, yes, suggest selling again on a move up to here. But if you do sell here, my next purchase would not be at 31, more so probably low 40s. If you're looking for that pullback within. If this area does fall below, well, I've been talking about the possibilities of that 21 test to come into play again, but there's no signs of it within this chart that it wants to do it. Once you're in this range, then you can say go either way, but you know on the break above here, you're playing to go in here. On a break below this range, you're playing to go to 21. And then a break above this 48.36 level takes us to the next level. And to find out what that level is, well, 161.8 was the 10.5, this was 14, this was 21, this was 31, this is the 48, this is the next one. We'll multiply this by 4, turns out to be 71.77. Add 4 to that, that's 75 3/4, would be the next upside target on a break above this 50 level. Thank you for tuning in and have yourself a great day. Bye-bye.